is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode of DeFi Decoded. I'm Alex Tapscott here with Andrew Young. For any devotee of the show, you know that the Bitcoin ETF saga has been one of the big topics that we've been discussing since the beginning, but particularly since last summer when BlackRock filed its Bitcoin ETF. This is a story that I've been tracking since 2013 when the Winklevoss twins filed and got rejected for their ETF. And it's been a very, very long and kind of tortured saga for companies trying to bring this asset class to market to traditional investors who either are unable or unwilling to hold the underlying asset themselves. And in the last 6 months, all of a sudden, this sort of seemingly immovable object has started to roll a little bit. And just last month in January, we finally got the long-awaited approval of not one, but 11 ETFs, all basically at the exact same moment in time, which set off an absolute bun fight between these different companies who are cutting fees and raising capital and marketing this very aggressively. Making sense of this process for the past 6 months have been two people, Eric Balchunas and James Seyffart at Bloomberg, who have kind of become like the, Svengalis of ETF filings. Basically helping to kind of explain this arcane world of SEC filings and so on and so forth to a crypto audience, which thinks of itself as very smart, but actually is wholly ignorant of how the real world really works. And James and Eric have been there along the way, helping to explain all of that. Bitcoin's not at an all-time high, but it's definitely a bull market in Twitter followers for the Bloomberg analysts who've been covering this. James, I think you become one of the main characters in crypto Twitter, for better or for worse. And I would love to know your thoughts on that. But first of all, welcome to the show. We're really happy to have you.
Yeah, for better or for worse is the right way to describe it. I don't know. I guess the jury's still out to figure that out, but I couldn't agree more with what you said, right? It's there's a lot of very smart people in crypto that try to port that knowledge into TradFi, and there's just some stuff that can't be ported over, and there's been a lot of mistakes, which has left an opening for me and Balchunas, and there's been a lot of other people that have filled that gap, or at least used sources that can fill that gap. On the journalistic side, but we have the benefit of being research analysts, so we can spout our own views and our own opinions and make our own calls on what we think is going to or not going to happen. So that's one area where we have a little bit of a leg up on our journalist colleagues who have been doing some of the similar stuff, but not quite exactly the same.
Yeah, absolutely. Well, let's take it back to the summer of last year when BlackRock filed for their IBIT ETF. And I remember when this happened, like I think both you and Eric together were like, holy moly, this is like a huge deal. Not just because they are the largest asset manager in the world, but because they had an almost like impeccable track record when it came to filing for ETFs, right? I can't remember the exact number. I'm sure you know the data, but they were like 401 or something on successful ETF filings. And so it was almost like that moment, even though we didn't know how the whole process was going to play out, massively de-risked the idea of an ETF getting approved. And I remember you guys were some of the first out there basically saying this increases the odds of an ETF getting approved from like a coin flip to like 90%. Like you were very early in saying that it like improved the odds a lot. So tell us about the thought process that went into that, that analysis.
Yeah, So even before that, I got ridiculed on crypto Twitter for saying that we had a 70% chance odds that Grayscale was going to win their lawsuit back in February. But until BlackRock filed, my view was that Grayscale would win the lawsuit, SEC would get eviscerated in court. I didn't think they would get as eviscerated as they did. But I kind of thought the SEC would find another way. So they say the grounds you were denying on in the past aren't good enough, you can't do that anymore. And then the SEC would come back and deny on new grounds that they haven't used historically. So we still had relatively low odds that we'd see a Bitcoin ETF in 2023, or in that cycle, I should say. We'll refer to a cycle as the next deadline. And BlackRock filing is what got us from zero. We went to 50-50 when BlackRock filed. And then we went to 75% once the Grayscale case was concluded. and it didn't look like the SEC was going to appeal. And we went to 90% in early October, which was for the reason that, so I don't know if you remember this or how closely your followers or listeners were paying attention, but a bunch of the U.S. government was potentially going to go into a shutdown, and the SEC basically delayed a whole bunch of stuff and moved really quickly in a whole bunch of these applications.
Yeah.
And everyone was like, that's it. We're not getting an ETF. It's not happening. But we got wind of something else that was happening, was the SEC was talking to them about their prospectus, basically giving comments on the stuff that they had submitted, which the first filing was in 2013. The SEC had never given comments on prospectuses or S1s in this case. So once we heard that, we were like, all right, if this is actually true, we're going to have to up our odds. And then we actually saw the first filing with an updated prospectus based on comments we were pretty certain from the SEC. So once that happened, that's when we went to 90%. So Grayscale, the SEC decided not to appeal. The Grayscale won their case, obviously. BlackRock being involved, and the fact that the SEC had gone around and started giving comments on things, which is something they had never done in the past. So all of that was like, all right, we went to 90%. And again, we got ridiculed for going to 90%. And by the time December came around, it was December and January. People were like, how are you still at 90%? You should be at 95 or 99%. So we went from being early and strong in our conviction to not being strong enough right before launch. But that's okay. There was a slim chance we thought we had heard rumblings that basically the Biden admin was considering stepping in. So I don't know how true those rumblings and rumors are, but they were from good sources that we trust. So that was why we left the odds out at like 5% towards the end.
Stepping in basically to kibosh the whole thing. Coming in over the top.
At the request of likely Elizabeth Warren is what was happening.
Right. But that didn't happen. In the end, the process ran its course. It's interesting you mentioned the comments. Like, I think a lot of people, who aren't aware of how this stuff works, saw that and figured, oh, well, comments are a bad thing because it means that they're criticizing the application. It's like, well, actually, any form of engagement is actually a good thing. And every single ETF filing ever, and we've done a few ourselves, right, involves a comment period, where it's very rare. If I've never heard of a product going to market without the regulator having at least some comments, right? So that was very much like a positive sign that they were maybe taking it more seriously. And of course, that was correct.
Yeah, we were fortunate to be correct. I mean, if we were wrong after the noise that we made and how vocal we were, I would have had to eat. I wouldn't be standing here. I'd probably be changing my career at this point.
Yeah. So it's interesting when you were at 90%, the thing that we were also looking at was like GBTC and ETHE, right? The two trust products. And, the trust products started off the year, GBTC at like 47.5% discount to NAV. And over the course of the year, with each of these catalysts that you've described, we saw that tick steadily higher. And I think, around the time where you were at 90%, the discount was probably more like 15 or so. Eventually,
it was even higher, I think. Yeah, it was even worse. Yeah, it was even worse than 15.
20. So I remember there being a disconnect. I was like, well, the market says that it's like 20, and these guys think it's only 10%, right? Likelihood it won't happen. Now, part of that is the time value with Grayscale, because, you hold it for long enough, you can earn interest, whatever. But in general, it was like the market was one place and you were somewhere else. So now I want to talk about Bitcoin, but it's an interesting sort of segue. Like with the Ethereum ETF, the last time that you made a call on that or a prediction was, I think, in January, when you said it was like 60 to 70%. But right now, that Ethereum trust is trading only at like an 11% discount. And that product narrowed a ton last year, but then sort of flatlined. And I'm wondering, this time around, are you guys being more conservative, or do you need to update your model, or do you think that maybe that people are being a little too enthusiastic about the idea of the Ethereum domino falling next?
So two things on that. One is when GBTC was trading at a 40 whatever percent discount, people were like, oh, that means there's only a 60% chance of approval, which I think isn't really the great way to look at. I mean, if you think about it, right? So you have something that's par is 100 and it's trading at 60. To go back to 100, so gaining $40 on 60 is not a 40% gain. That is a 90% gain, essentially, which people like. That math was breaking people's brains, because I was trying to explain to people, like, there is way more juice in here than you think there is. And I was, unfortunately, despite my conviction, or actually fortunately probably, I was not allowed to invest. Otherwise, I would have piled a lot of money into GBTC myself.
Right.
But your question on ETHE,
Yeah, like basically, like if you'd bought GBTC in January at a 50% discount, and the price remained the same, but the discount narrowed to zero, you double your money. It's not like you increase it by 50%, right? Yeah, so
exactly. Yeah,
it was an amazing trade for those of us who did it, or those people who did it.
Yeah, and actually, just to jump in, a lot of people used to, what they would do is they would go long the ETF or the Grayscale product and then short spot, which funny enough was actually kind of a widowmaker trade in the last crypto bull market because the discount actually widened, and it was part of what took out Three Arrows. So it's kind of funny that trade finally paid off after a lot of the people who did it the biggest in size in the last bull market sort of got taken out by it. But
yeah, I mean, it was literally the widowmaker trade. I mean, look, DCG is still suffering from it in a way with Genesis. They and then not to mention 3 Hours Capital, Voyager, you name it. FTX had a huge chunk of this. Like everyone and their mother was in on this trade, and it took a while to work out. But I remember back in, like, this is going way back in 2017, 2018, I was talking about the fact like these things could trade at a discount. I should probably go look at it and like find it again because everyone was just ripping me apart saying FUD, the premium can go to 200% and all this stuff. So that was fun. That was before anyone really, I guess, respected my views. On ETHE, I'm still around 60%, 65%, for multiple reasons. One, I do think it's more likely than not. I think it's the easiest path. It's the simplest path forward. That said, there are things the SEC can do to kind of delay and kick this can down the road.
Yeah.
Right. This is not a situation where you have a federal court telling the commissioner of the SEC that every reason you've used to deny an ETF in the past and so far in this most recent iteration does not make sense and does not hold water on legal grounds. That is not the case here. That said, so like Gensler has ways that he can kind of like kick this can down the road. If you give me to the end of 2025, my odds probably go up to near 100%, honestly.
Yeah.
But 90 something percent. So my view is two things. One, people are like, well, the SEC is going to claim that Ethereum is a security and then it'll be over. I think the SEC has de facto accepted the fact that Ethereum is a commodity under the framework of the SEC and CFTC for years now, since they allowed the CME to list Ethereum futures contracts under like traditional futures contracts as a commodity. They could have pushed that and said it was security. If they really didn't want to allow this to happen and really stop this, they would have had to fight and stop Ethereum futures ETFs from listing. So I think the SEC has just basically implicitly accepted these things as a commodity status right now. They're never going to say that. If they come out and say Ethereum is a commodity, you're going to have every other digital asset project under the sun trying to claim that, oh, we meet all the criteria that the Ethereum made on this random checklist. So the SEC is just it's much better for them to leave things in an ambiguous nature, if you will.
Yeah.
So I think that's the way they're going to leave it.
Does the Canadian experience in any way guide the thinking? Because, the OSC, the regulator here, I mean, if you read our securities regulations, they're nearly identical to the SEC's. And like their sister regulator, and in Canada, we've had spot Bitcoin and ETH ETFs now for several years. And I wonder if it's not like they're not eager to find reasons to approve it, but is that part of an argument that others might make to say, look, like we have ample evidence now in a similar kind of capital market that these work okay? I've always wondered about that because what's been remarkable about the Canadian ETFs is just how unremarkable they've been. They're just sort of there. They've gathered a few bill, like they've been successful, but generally they just sort of exist, right?
Yeah, I mean, this is an argument we've been making for 5 years now.
Yeah.
It was look at what's happening in Europe, and then the Canadian ETFs launched, and everything has been smooth. There's been massive volatility, and still everything trades tight. Like you have to really, really look for like instances where things like traded a little bit of premium or discount. And then you can point to the fact that for a while it was just GBTC, which was trading at 100% premiums a few years ago, and then trading at a 50% discount. Like this was a broken, inefficient product to get access, and all you have to do is look around the world and be like, the ETF wrapper works, right? Yeah. So that was always part of our argument. And the SEC always said, we don't care what other people are doing. We're worried about these characteristics, blah, 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 blah. And they basically said, we're denying. The only reason we got them approved is because Grayscale beat them in court. And then you throw the fact that you have the weight of Fidelity and BlackRock and a lot of these other huge asset managers in there. That also obviously didn't hurt. So the SEC could kind of lean on the fact that we have the big boys in the room. But my boss, Eric Balchunas, gave a speech at the SEC, not related to Bitcoin ETFs, but he did use a slide to talk about it. And his whole pitch was trust the ETF industry, trust the ETF market maker, trust the ETF market participants more than you distrust crypto, because they were going to, like, it's going to work out. And if you look at what's happened with the Bitcoin market, like spot trading market, even CME futures, things have tightened up. If spreads have been almost non-existent, virtually 0% spreads. There's no commissions. They're tracking very tightly. Like, there has been virtually zero issues. Even if these things were seeing massive outflows and sending the price tanking, I would still consider this a success because it's a much more efficient access to the underlying asset. Like I said, OSC is way more, your relationship in Canada with the OSC is way better than the relationship that these asset managers have with the SEC. I've talked to different asset managers up there, and it's just, there's way more, it's a two-way street more so with the OSC than with the SEC. The SEC is very much big brother in the room and dictating where things go. And to be honest, the staff at the SEC, for the most part, the SEC in general just lets the staff do their job, go through the day-to-day, take care of all this, get it set up, and that's that. But on this topic, it was a 10th floor decision, meaning it was the commissioner level decision, in this case, Gary Gensler. So pretty much anything related to these digital asset ETPs is a top-down decision. So the staff is ready to go and make decisions, give comments, get these things through, but it's not really up to them. They still answer to a boss, who's Gary Gensler, and Gary arguably essentially answers to Elizabeth Warren in a way.
Right. Interesting. I would say that up here, it's there's definitely more of a dialogue with the regulator. It's not chummy, but it's not adversarial, right? It's sort of constructive relationship, I guess.
I mean, it's not just Bitcoin and Ethereum. I mean, you guys had marijuana ETFs before we did. You've had pretty much everything before we had. You had the first ETF before the US did, because the US took over 3 years before they allowed SPY to actually launch, and you guys got one listed before then. So you guys just have a more friendly, forward-looking relationship with your regulator, the OSC, than US markets do. For better or for worse. And honestly, I would argue almost unanimously that it's been for the better. But I guess we don't need to spend so much time talking about the regulatory stuff. But yeah, really, the OSC is, as far as I'm concerned, a better regulator to deal with than the SEC.
Well, certainly we've had a great relationship with them. So you mentioned that at the outset, even if this had been a failure in the sense that there had been not huge inflows, that the manner in which they've traded has been a success, because it's like demonstrated that ETFs are like a good way to get exposure. But from a flow perspective, it's actually been a massive success. I mean, there were some crazy predictions going into it. And in many respects, the market exceeded them, right? And you and Eric together have been sharing some kind of remarkable data just to help put it into context, because I think people, again, those on the crypto side who are very bright but not aware of how this world works, are thinking like, I thought it was supposed to be 10 billion and it's only 8 billion or something. Like what the WTF, you know? But it's like, well, just put it in perspective. So help us put the launch of the Bitcoin ETFs in perspective, James.
Yeah, I mean, this if you equate them as, even if you include GBTC's outflows and you just put these as one ETF, like, this is unanimously the best launch in ETF history. Right. You take a few of these, you just take IBIT and FBTC. They are in the top 4 to 5 launches in US history, arguably 1 and 2 now after the first month. Part of that is buoyed by the fact that they're undoubtedly seeing money that's pouring out of GBTC into their product. So it's kind of like an asterisk, no matter how you slice it. The asterisk is stealing from GBTC, or the asterisk is a lot of money is poured out of GBTC. So right now, the net flows to these 10 ETFs is over 5 billion through yesterday, through Friday, the whatever that was, 16th, because yesterday was a holiday in the States.
From GBTC, it's still positive 5 billion. Yeah,
correct. And so the total number is 12 billion if you exclude the outflows from GBTC. Now, some of that is money that came out. The people are like, it's just recycled money. That's not true.
No way.
We were just talking about that massive discount in GBTC. There was a lot of people that were investing in GBTC, not because they wanted exposure to Bitcoin, but because they were arbing that discount, or they were doing exactly what Andrew was talking about. They were going long GBTC, shorting Bitcoin. Once that discount was gone, they unlocked that trade, they were done. I know private equity funds that would do this. I know family offices. I know hedge funds. So there's a lot of money in GBTC that was never going to stick around for the long term. Not to say there isn't money in there that's sticking around for the long term, but there was. There wasn't, not all of it. So a lot of this money has gone out and did not find its way back. That's before we even mentioned the fact that FTX had almost $1 billion of this thing that was not going to cash and never coming back to Bitcoin. DCG owns a huge chunk of this. I wouldn't be surprised if they're selling it. Genesis pledged a bunch of it to Gemini Earn, which is still kind of up in the air on how much of that has actually been sold now. So there's been billions out of that 7 billion that flew out of GBTC that just never found its way back. So people are like saying, oh, it's all recycled money. No, it really isn't. This is a lot of new money. The caveat there is that the ETFs in Canada have seen some outflows. The ETFs in Europe have seen some outflows. We've seen some futures open interest on the CME Bitcoin futures market drop a little bit. But still, even if you net everything out, this has been positive as far as flows going to Bitcoin. I mean, Bitcoin, you just need to look at the price. I mean, a lot of people are like, oh, flows are going in, but money's going down, but the price is going down. And I feel like the crypto crowd just thinks like the only thing that can move the price now is Bitcoin ETF flows, which no one says that about the S&P 500. Like S&P 500 ETFs, they took in $10 billion last month. Why did the S&P go down? It's like they're a piece of the market. They are not the market, which I feel like a lot of the crypto crowd doesn't really get. Though admittedly, they are now a big slice of the market. You can see it in the way that you look at volume, because trades 24/7. You can see a lot of the volume is now during the U.S. trading hours and things like that. But
how much do you know? Do you know off the top of your head, like what share of spot flows, spot trading is now ETF inflows, or at least has been, let's say, for the last 2 weeks?
I actually don't know. I don't know the actual spot Bitcoin trading volume. But I have no idea what the percentage is.
One of the SEC's concerns, right, was that it's highly fragmented across different platforms. But yeah, interesting. Andrew, do you want to jump in?
Yeah, no, and one other thing that's interesting, some of the TradFi hedge funds that did that GBTC trade have actually stayed in their position almost because of the momentum just in Bitcoin. And so in some ways, the trade has actually kind of converted some people into long Bitcoiners. So one thing that not to shift topics too much, but one of the sort of fun topics on crypto Twitter is beyond Bitcoin and Ethereum, what's the next sort of crypto asset that would potentially get an ETF? And from what I can tell, there's sort of like three targets that seem like potential sort of next crypto assets after. First one obviously being Solana, just because I think at now it's maybe not the third biggest crypto asset yet, but has by far the most momentum and definitely one of the most sort of, from a dev perspective, most utilized assets. And similar to ETH, it's like a smart contract chain. Next would be the closest crypto asset to Bitcoin, so Litecoin, even though it has far less sort of, I would say, investor interest than Solana, but second ever crypto asset ever created, a silver to Bitcoin's gold, so it sort of makes a little bit of sense. And then finally, something like Dogecoin, which it's a meme.
Three top picks.
I'm not a Ripple guy, but I'd put Ripple ahead of there just because of the court cases that's the questions I'm getting mostly, honestly. Right. Ripple and Solana are the two that I get. Litecoin a little bit as well.
Yeah.
I mean, well, first, before I answer my question for the States, like what is OSC saying about any of those assets?
Well, I can't comment on any filings, whether they're ongoing or not. No, what I will say is that basically the fact that there's a regulated futures market for Bitcoin and Ether has made it very easy. Not very easy. Has made it much more palatable, because it means that the market makers can go in and create and redeem units without taking on market risk, right? They can hedge their exposure, and those CME futures are kind of key to the whole equation, or at least they were in the eyes of the regulator, because there aren't those kinds of markets, at least today, for those other assets. I think it would be an uphill battle. I can't speak for every issuer in Canada, but I think in general, there's also just a demand question of if we build it, will they come for some of these other assets? I think in the US, the juice is always worth the squeeze. I mean, I look at Grayscale's Solana Trust, which has tiny AUM but trades at a 3x premium to NAV.
Stupid premium.
That should tell you everything you need to know about the probability of an ETF, in my view, because it means that it's not forthcoming. Because like that was the whole idea with GBTC when it traded at like a 30% premium. So I don't know who's buying this stuff at 3 times. It's so dumb, but I think in Canada that. To answer your question, to limit my answer just to your question, in Canada, that's always been the issue, is the futures market question.
Yeah, so that's the same issue here. There's no other ETF, ETP holding another digital asset aside from Bitcoin or Ethereum coming to US markets anytime remotely soon. I mean, honestly, granted, if we get a new admin in the White House and you change the head of the SEC, maybe you could get something in the next couple of years where they set something up. You might literally need an active Congress before you can get any other digital asset in here. Even if I have a lot of these XRP army people like, oh, it's not a security, the SEC, like the courts deemed it. One, that's not a done deal yet, obviously. And two, even if it was a done deal, there's still no regulated market like Alex was just talking about. You need a regulated market. The reason the SEC approved these things repeatedly was because they had surveillance sharing agreement on the CME via the CFTC. And they didn't really even want to approve these. That you can read everything Gensler said. He was basically admitted like we were forced into doing this. So yeah, any other asset, as far as I'm concerned, not happening anytime remotely soon. The only one with any chance in the next year or two is Ethereum. Obviously, that can change with the election, but even still, even after the election, let's say the Republican wins, which seems going to be Trump at this time, put somebody else at the head of the SEC. I still don't see a Trump official like coming out and being like, all right, free reign, everyone just launch your digital assets here. Yeah, it's just not going to happen.
I mean, we know that Trump and Mnuchin, his last
Mnuchin hated crypto.
It didn't really. Yeah, they were not fans. Like it's not a guarantee. Like your political beliefs will not necessarily align with this issue. You know, I think people need to understand that on Twitter.
Yeah. I think the Trump's NFTs have gotten a lot of people sort of excited that maybe he's turned a corner on crypto, but it's not clear if Trump even knows that NFTs are linked to crypto or whatnot. Like it's sort of like a digital collectible. So
really, what we'll know it if he gets long first, then it'll be fill and shill for Trump.
Yeah,
if he can make money on it anyway. So you mentioned the Canadian ETFs have seen some outflows, and that shouldn't be that surprising because they're 1% or 40 beeps, and these are cheaper, and they're also bigger and more liquid. Barring drastic fee cuts, like, is this just going to be a slow drip, out of these things? And similar question for GBTC, which is obviously the bigger elephant in the room, right? Like Grayscale kept its fee at 1.5%, which, I guess don't kill the golden goose, but it makes it so that it's clearly not as competitive as 20 beeps or 0% or whatever those other guys are charging. So like, what's going on with these higher fee funds?
Yeah. So as far as Canada, I wrote a note that basically said that these US ETFs, it's going to be a lot of recycled money to start. This isn't the question you asked, but I predicted 10 to 15 billion. That was my guess. I thought that was a realistic chance for the first year of these US ETFs launching. We're at 5 now, we're already halfway there, a month and change in. So it's not looking good for me on my prediction, but time will tell, right? That said, I predicted that money was going to flow from futures. I predicted it was going to come from Canadian ETFs and European ETFs because of all the reasons you mentioned. Granted, they are even cheaper than I thought they were going to be. I thought maybe we'd see stuff in the 40 bips range initially. And the fees are now, they're 0 for most of these, and they're down at 20 bips even long term. So that was surprising to me. But I think a lot of the money that went into those Canadian ETFs when they launched, it was pretty obvious to me, and from anecdotal evidence of talking to different people, that a lot of that was U.S. institutions or family offices, private equity funds, or you name it, those types of private funds that went because it was a better vehicle than GBTC. If you look at when GBTC really collapsed from its premium or discount really went to a bad level, it was when the spot ETFs launched in Canada. And I don't think that was a coincidence. I think some of that money was like, this is a better vehicle because we don't have to worry about discounts and premiums. And I think some of that money is just coming back to the U.S. One of the things that the U.S. does in the U.S. ETF market is we basically export liquidity and low fees, like you were talking about. So for the most part, it's not surprising to us at all that these things have been as successful as they have been. And the one thing, like one of the reasons that Balchunas and I and others, Nate Geraci at the ETF store and other people were pushing so hard for the ETF, for Bitcoin ETF, wasn't necessarily we're pushing hard because Bitcoin is the best investment in the world, what have you. Balchunas is really not even that into Bitcoin. The whole point was like this structure works like really well. Like it's the best solution for investors looking to get exposure to any digital asset like this on the traditional financial rails. And I'm an ETF maxi. I was bullish on the ETF structure, being able to figure out a way and fine tune all this stuff to make a most efficient vehicle possible. And we've been proven right. That's always been our case. And I think that you guys proved it first up in Canada. Well, I guess Europe did first. Then you guys are the more similar structure to the way things work in the US. And that has just been borne out. Now, how much money is going to come out of GBTC? I assumed they were going to cut the fee. So when I was assuming their fee would be a little bit more expensive than everyone else. So I was thinking everyone else would be around 40 and GBTC will come in at like 69 bips or something like that, right? Like that's what I was thinking. I was like, they're going to lose 25% of their assets. They're going to see billions in outflows. I basically said, even if GBTC cut the fee to zero, they were going to see billions in outflows. So I don't agree with their move to keep it at 1.5. I suspect there's different reasons for why they did that. I've talked to them about it. They're not going to give anyone an answer. I have my theories on what they were going to do. I've been saying for over a year now that I think they were going to launch a mini product. Basically, GBTC would keep a relatively high fee because it's liquidity, and they can do that. That happens in the ETF world often. And then they launch like a cheap portfolio version of the fund. So that's one. I wouldn't be surprised if they still did that at some point. But the math for them is this, right? Let's say this is a $10 billion fund, right? It's not. It was 30 billion roughly when it converted. But you're used to earning 2% in fees every year. That's $200 million. To compete with everyone, you have to go to 20 bips. So like that's a 90% cut in fees because then you're going from getting $200 million a year to $20 million a year. And if you're used to earning, I don't know, for a normal person, listen to this. I mean, if you're used to earning $200,000 a year and then they're like, well, you're going to keep doing the same thing, but you're only going to get $20,000 a year. That's a tough pill to swallow. That said, they knew it was coming. Everyone kind of knew it was coming. And I'm sure the math they did was something like, all right, we're still going to cut our fee, but we don't, as long as we cut so they cut their fee by 25% to 1.5. And the math is like, as long as the corresponding outflows don't equate to our revenue dropping by 90%. So even if we see 50% of our money gone, we're still ending up ahead on the revenue and profit basis by leaving it at 1.5. I mean, there's ETFs in Canada that are up near that 1.5% level. So it's not that crazy of a fee on an international stage, but compared to your competitors, it doesn't look good. So I was saying this because I thought they were going to go 69 bips, lose 25% of their assets. I think people are underestimating how sticky some of these assets are going to be. People don't want to pay taxes if they don't have to. Obviously, I think it's going to be a drip for a very long time that money will pour out. But for the most part, they'll do just fine keeping the assets. So 25%, I think they're right around that right now. I have to assume it's going to go to a third, at least maybe 35% of the assets. Or I go by shares, the amount of shares outstanding that have left, because it's hard to do it by assets because assets are affected by price. But I think 35% of the assets or shares will be gone. And that might be where they sit kind of long term. Time will tell, I guess. But that's the way I'm viewing it.
Yeah, and I think it definitely helps that Bitcoin rallied pretty aggressively going into it. So people, cap gains became more and more of an issue for people to rotate out. They may have had to, potentially cut their fee more if Bitcoin was still in the 20K range.
And then I would also say, like what you were just talking about, there's also a lot of people who are stuck in this thing with short-term cap gains. So making the calculus that you're going to sell at a short-term cap gains, which in the US you're taxed at your income level. So that could be 30% for anyone making a decent amount of money. Even still, it doesn't matter. That's a decent amount of money. Whereas, all right, I'm going to hold GBTC until I can sell and incur a long-term capital gains tax, which 15% or what have you, is way better calculus than 30%. So there's likely to still be some selling, some people that are stuck that are planning to sell in the next year or so. But I mean, time will tell. Right now, the one thing that I think GBTC needs to be worried about is the fact that IBIT is trading more than them or as much as they are most days. So I think they thought they'd be able to keep the liquidity crown and justify their fee, which many ETFs out there have done. So you've seen it in emerging markets ETFs, you've seen it in gold ETFs. The first of their kind of keeps their fee at a relatively high level, sometimes many times multiples of what the cheaper options are. Yeah. But it does just fine because that's what all the traders use. And traders don't really care that much about the fee because the fee comes out like a tiny little bit every single day. And if you're only trading this intraday or like over a couple of day time period, that fee doesn't matter as much as liquidity and spreads and things like that. Totally. But you have now other ETFs that are trading with super tight spreads and almost as much liquidity. But the real way to tell will be when we see some serious volatile days, which ETF really pulls away. And that will be the one that ends up being the, I guess, the king, the liquidity king.
On the topic of trading, though, has there been any talk of 2x or 3x Bitcoin ETFs? Because obviously that's even more capital efficient for short-term traders, less attractive for long-term holders. But I'm kind of curious your take on sort of these more exotic ETFs. We could also talk about Ethereum staking ETFs, but those are obviously, we need an Ethereum ETF first, so.
You guys have a staking ETF in Canada, but we don't have one here in the States yet. Yeah. And I just did the math. GBTC has lost 26% of its shares, just over 26%. So right. I was close. I undercut it. As far as staking, there's no way. I think that we get, as I said, I think my odds aren't that strong. I'm not super convinced that we're going to see a spot ETH ETF. If we do, I am convinced it will not have staking. That is one thing I am convinced of. And the thing you're talking about with Litecoin and some of these other things, whether people be interested, you can look at the Ethereum futures ETFs here in the States. That launch, we had low expectations because it was futures and we didn't think people cared as much about Ethereum as they do Bitcoin. That launch underperformed my low expectations by a lot. So I think just the TradFi world is more interested in Bitcoin. The digital store of value, digital gold type of thing resonates more with them than the Web3 internet of money type of thing that Ethereum is more for. And I think people think crypto and they think Bitcoin. So I think eventually there will be more teaching and knowledge and understanding of like what these things, different things are. Part of it may have been that they thought they were getting a spot ETH ETF and they don't need to buy a futures ETF as it is. But yeah, I think there's just going to be less interest overall for spot ETH than there will be spot Bitcoin. And I forgot the first part of your question that you asked, Andrew.
Oh yeah, I was just asking about like the 2 or 3x ETFs.
Oh yeah. Yes, we will see. There's some filed. There's likely to see some launch in the next couple of weeks. We do have a 2x Bitcoin futures ETF, but that thing charges 1.95%. So there's leveraged ones out there. But T-Rex, Tuttle, and Rex shares have partnered together to launch some of these things. And I don't know for certain that they're going to launch, but based on what I'm hearing, they are likely to launch in the very near future. So there will be leveraged spot products. Yes.
Yeah, that's interesting. The comment about spot ETH, which is that. It's true. I think the traditional finance world knows the Bitcoin narrative and it's been drilled into their head. And so like there is demand there. But we do know from ETHE, from the Grayscale product, that there is quite a bit of demand, right, for that asset. And maybe it's not based on a belief in Web3's potential, or maybe it's more based on the number going up. But that does exist. And I think that, if we did have those come to market, it could have an even bigger impact on the price of Ethereum, because that market is just much more thinly traded than the Bitcoin market is. And even though it would probably gather far fewer flows, it might have like an outsized impact. You don't have to respond to that. I actually am so curious about your view on the staking component. So is your view that it wouldn't have staking because staking, at least in Ethereum's case, requires you to lock up tokens, and that would make it more difficult to do create and redeem? Or is it because of the security regulatory question, or is it both?
Yeah, before I even answer that, I'd say I have your book on the bookshelf over there. So more people need to read your book, Advisor, so they can understand the benefit of some of this stuff. But that,
Thank you.
I think so. Even before we get into what the SEC is going to use to do it, I think we've seen them attack every sort of staking service out there. They went after BlockFi, which was lending, which is slightly different, but they're obviously going after Coinbase and Kraken for their staking. Obviously, there's minute difference between like what they're doing, but the SEC is just hostile towards staking in general. You've seen like him hinting at stuff like it makes it a security, all these different things, which I don't even need to get into. Like, we can discuss those, I guess, if you want, but like overall, I just think the SEC doesn't want staking. And then you add in the fact that you were talking about liquidity. An ETF needs to be able to meet liquidity and redemptions. I think there are ways around that. You can get lines of credit in case something gets locked up a little bit. Maybe you can only stake a certain portion of your ETF Ethereum that you're holding. There are ways around it that would make these operate as very efficient vehicles, where you say like, okay, you can stake the ETH, but you can only stake like 30% of it or something along those lines. And then if it's more than 70% of the money leaves, you need to have a line of credit that you can draw down from to give exiting shareholders back their cash or what have you. Like, there are many ways I can think of that you can solve any concerns that the SEC would have. I just think that initially, if the SEC allows these spot Ethereum ETFs to launch, I'd be shocked if they allow staking. That said, we've seen Franklin file, and in their filing, they basically say they're going to stake. Same with ARK and 21 shares. I believe Van Eck actually doesn't. They are not going to stake. I think it comes down to the fact that some of these other issuers are just like, force me to take it out, like tell me to take it out, and then we'll take it out. I think they know they're not going to get it through. Right. But I mean, we can't know. Honestly, we'll know more in a month, like a month and a half. We'll know if there was comments sometime. If we don't see any comments by around April timeframe, then we'll know that some things are not good and it might not happen. Right. Yeah. We saw comments in October. These things launched on January 10th for Bitcoin. I don't think you need anywhere near that length of time. Things didn't really start heating up until November, December, even into the holidays was when they were like giving these lawyers deadlines of like, all right, it's Friday night, get this stuff back to us by Monday at 10 a.m. And there's teams of lawyers at all of these different firms working with all these different issuers that work through the entire weekend, 16-hour days, like getting this stuff done and finalized and ready to go. Yeah. So for a while, we didn't think they were all going to launch, but basically they learned enough from that process. Like, yes, Bitcoin and Ethereum are very different, but for the most part, a lot of the legal minutia that the SEC is going to critique or care about, it's been satisfied. So you don't need that same length of time that you needed for the SEC to go back and forth with these issuers. I don't know how much time they need. I would wager it's going to probably be at least more than a month. So May 23rd is the deadline for Van Eck's application. So I would say if you don't see something by like mid to early April, any movement from the SEC on any of this, we don't see comments coming back or hear anything about comments, I'd say the odds of anything getting approved are very slim. So we'll know more
today. Like, by what date will we have an ETH ETF?
So the equivalent of January 10th for spot Bitcoin in the US, which was ARK and 21 shares final deadline, Jan 10, the equivalent of that date is May 23rd for Van Eck. That said, they could do what I thought they might have done with Bitcoin, in the sense that there's two processes that you need to go through to launch a spot commodity ETF or a 1933 Act ETF. You need to get 19B4 approval, which is that process that's all those deadlines and delays, and then approve or deny. That's the 23rd deadline, May 23rd. They also have to get S1s, their prospectuses, those comments I was talking about. There's comments on both those processes, but the one that really perked us up in October of last year was the S1 comments or prospectus comments. So you need two documents to be signed off by the SEC by two separate divisions. In Bitcoin, they work together to get them both signed off and ready to go on the same day, so they could all launch on the same day. There's nothing saying that they could do the 19B4s on May 23rd and then take more time to do more stuff with the S1s. But if they follow the same process they followed for Bitcoin, they will approve these things on May 23rd, and then they would go list the day or two after. That said, like I said in the beginning, I'm nowhere near as confident on that happening. I would honestly think so the 23rd is a Thursday, the 24th is a Friday for the most part. On things like this, they try not to launch on like a Monday or Friday. So we'll see what happens on that front. I mean, I don't know how much they'll actually care about that, but anytime there's like big launches like that, new things, for most part, the SEC and even the issuers prefer to do it like in the middle of the week. So I don't know. We'll see. But yeah, 23rd is the date to watch. Right. If you hear anything else on Ethereum, spot Bitcoin, and people are like, oh, this is delayed or anything along those lines, it does not matter. None of it matters in any way whatsoever until the SEC makes a decision on May 23rd. So you can ignore tons of people are going to tweet out, "Oh, this got delayed. It means it's going to be denied." Anyone listen to this, just ignore all of that. I'll be sure to tweet out anything that meaningfully happens for spot ETF approvals in the U.S.
And if we get if we get comments before in April, the probability goes up pretty dramatically, I guess.
Yeah, so I think you get to mid-April for me, and my odds cannot be 60%. They're either going to have to be higher or lower, as far as I'm concerned, because either the SEC will not have given any comments whatsoever, which is not a good sign. Again, wouldn't make it so it's 0% probability, because like I said, I don't know how much time they need and how much overlap there is between the comments they give in Bitcoin and ETH. But if they have given comments, that would be indication that they're willing to work with these issuers and get these things across the finish line. I'll take a step back and just say real quickly, like the way I viewed this since the summer is the SEC has kind of spun around on specifically ETH and Bitcoin. I think Gensler's like, it's not worth, the juice isn't worth the squeeze. We can just kind of delay and do what we have to do for these things, and we can just wage war on the rest of the industry via Coinbase, Kraken, you name it. And it's just not worth their time to fight this stuff anymore, especially when they know deep down in their bones that this is the best thing for end investors. Right now, you're leaving all these ETHE and these other products and forcing them to go to exchanges. And there's no easy way for traditional financial exposure to get exposure to these products that in a clean, efficient, and regulated manner. I mean, just look at the way these ETFs have operated, the massive success across spreads, trading, correlations, you name it, for these spot Bitcoin ETFs are just like honestly, Gensler probably kind of hoped that it was going to be a blow up and there would be some huge calamitous screw up from these issuers and these market makers. That probably would have been better for him, because then he could be like, we let the Bitcoin ETFs go through and it blew all this stuff up, so we're not comfortable with ETH. But really, you look at anything that happened with the spot Bitcoin ETFs and you're like, that was a smashing success, and they've done everything they said they were going to do and then some. So yeah, I think the easiest and simplest path forward is to approve these things. I just don't know how much Gary wants to wage war on Ethereum and stake his claim here.
Interesting. That's great color, James. I mean, this information's out there, but to have someone who's so expert and like understands it is illuminating. Just on that final point, because I know we got to go, but I think one of the things that has happened as a result of this ETF process is people have learned a lot more about Bloomberg Intelligence. So, most of the time you expect journalists to be knowledgeable, but generally speaking, at least my experience is in the financial industry, it's sort of like a mile wide and a few inches deep, because they can't be experts in every single area, right? Like if you're covering ETFs and the stock market and fixed income and so forth. But like in your case, like Bloomberg Intelligence, like you're not a journalist. And I think there's some confusion there, because Bloomberg has a media outlet, but the terminal is this, subscription service that financial professionals have been buying for decades. And part of that is that, the revenue gets to pay for like people who get to become the world's leading authority on a specific issue. And I'm just wondering, like, I don't really know what my question is, other than like, is that like Bloomberg Intelligence? Like, is your whole time, like, now that you've had a taste of this like crypto ETF thing, like, I don't know what's next for you, I guess.
Yeah. So I'll give Bloomberg Intelligence is Bloomberg's research arm. So our stuff is only available if you have a terminal subscription, but we're available to you in the same way that you would reach out to a buy side analyst or sell side analyst to ask questions, depending on who you're speaking to. So our job is to be there for our clients and answer questions. Yeah. And we share a lot of that for free on Twitter and LinkedIn, but we can't share all of it, right? Like I'm very open with anyone I talk to, but for the most part, I release or share my stuff with research on the terminal before I like tweet it out and things like that. Yeah. Right. So our job is to be thought leaders on the space, but I work very closely with our reporters. So Bloomberg News specifically, I'll shout out a few people: Katie Greifeld, Vildana Hayrick, Emily Grafeo, Isabel Lee. They cover the ETF and the asset management industry. They're on TV. They rely on us for certain things. We rely on them. Like, I'm not going to go and do due diligence and like reach out to a source. I'll tell them like, this is what I'm hearing. Reach out to your sources. Yeah. So there's kind of like a little bit of a symbiotic relationship there. But yeah, I've been covering this. So I joined BI in 2017. Before that, I was in our data department on the back end, like working with administrators and custodians and writing descriptions for funds and making sure the NAVs and shares outstanding and flows were updating properly. So like, I know how all of that stuff works in the back end. I was in the trenches, and now I write research about it. So like for the most part, like just doing all of that has made me smarter in handling this. But I've also been covering crypto a little bit in general since I moved to BI in 2017. And I've been covering these trust products because I love closed-end funds, and these things are kind of like closed-end funds. So I've been covering this as like a niche thing for like 7 years now. Yeah. And it kind of like, it's like, I had a little bit of an expertise in crypto. I had a definitive expertise in asset management, specifically ETFs. And there's like this little overlap in the middle where like I found myself, and I just like couldn't help myself but like comment on people and correct them on Twitter. And fortunate enough, I was lucky to be right. But it's very rare that like something that like the zeitgeist and a lot of people are interested in like overlaps in one area where you have a lot of expertise. But yeah, if you have a Bloomberg terminal, we have people that do credit research, equity research, specific credit like company research, equity stock research, equity strategy overall, whether it's large cap, small cap, ESG. We cover ETFs. I cover the whole asset management industry. So if you have a Bloomberg terminal, like feel free to reach out. I'm always happy to chat. I talked with you, Alex, a bit the last few days, but really, if anyone wants to reach out or has any questions, happy to chat at all times. But my job is to be an expert, and then we are used internally almost like consultants, because I know how the data works in the back end, and I'm a subscriber myself because I use it to write our research. So I work with our core products team and the engineers in the back end to make our terminal and functions better for whatever people are interested in, because I'm actually using it. So I wear a lot of hats. We get to go on TV and stuff. But yeah, as you said, I am not a journalist. I'm not going to track down sources for all these different things, but I am going to do primary research into like reading these documents that are good material to make you go to sleep at night.
It's clearly working hand in glove, because I think Bloomberg's reporting on this issue is great, and then obviously your research is world class. And as someone with a Bloomberg terminal, I get access to this, which is great. But honestly, like for the average person, the alpha and like the clarity and the correct and the accuracy is so refreshing in an industry that moves very quickly, where there's a lot of truths and half truths, where people are just trying to gather and synthesize information, and everyone's got a spin on it. This is like a breath of fresh air. It's been really amazing having you as like a guide on this frontier, on this journey of sorts. So James, this has been an amazing conversation. I don't know. I feel like I could go on, but you've answered, frankly, a lot of questions. I've learned a lot from this conversation. Really grateful for all that you do for the industry. And thank you once again for coming on, and enjoy the book. I'm curious to hear what you think about it.
I will. I'm planning to read it. It's on the front of my bookshelf. It's the next book I'm planning to read. So I will let you know what I think of it. I'll be honest. I promise.
Yeah, please do. That's all we can hope for. All right. That's it for today's episode of DeFi Decoded. I'm Alex with Andrew. Yeah. See you next time. Take care.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.